Hi, I'm Robin Willis with eXp Realty in Tucson.
And I'm Rick Hendricks with Primary Residential Mortgage. Welcome back to segment 3, which is the cost of waiting.
That's right. So we found out that the market is very strong, and we did a comparison on renting versus buying. So let's say that you want to buy, but you're wondering, well, can I wait 6 months to a year? Well, we're here to talk to you about what that means for you financially.
Correct. Okay, so we're going to go into some pretty in-depth numbers here. So let's start with the values that I'm using. I am using the median income price, $231,710. And if you look at a loan, we're assuming an interest rate of 4.5%. And as we continue to wait, we expect that interest rates will go up. So we've adjusted those numbers accordingly as to what we expect may happen over the next 6 months to 3 years. So let's look at the different areas where it could be costing us money if we wait. First of all, property values. We know that property values are increasing, and they look like they're going to continue to increase because we have a very large demand and a very small supply. The loan amounts, as property values increase, and again, I'm using an assumption of a 5% down payment. So loan amounts will also go up because as property values increase, obviously your loan amount has to be higher. Your down payment will also have to be higher. The interest rate we spoke of could change. The APR will be affected. And the mortgage insurance, because again, higher loan amounts will be adjusted as well with a 5% down mortgage insurance. So we look at two little graphs here. One is the appreciation of the property and how waiting, what that could mean to you. And also your payments over time by waiting, what that could mean to you as far as increased payments.
Yeah, so keep in mind, if you need to wait or deciding to wait, that you're going to end up, you're going to get less house than you can afford right now unless things change in your financial situation. So think about greater down payment, think about the fact that the house itself is going to cost more, and make your decision accordingly.
Correct. Okay, so let's do a more in-depth dive into the cost of waiting analysis. The payment difference on a monthly basis of waiting 6 months could be the potential of $81 or almost $1,000 a year. Whereas if you wait 3 years, you'll notice that it could cost you an extra $222 or over $2,600 a year. That's a pretty substantial penalty. Not including the loss of appreciation, which can be anywhere from $5,000 to over $12,000, and the amortization loss, meaning you haven't been paying down on your loan, you've been paying down on somebody else's loan, so you've lost that amortization of your own loan of anywhere from $2,400 to over $15,000. So if you look at it in a bar graph format, you can see how you're losing both on amortization and appreciation, what that total cost could be. And this is just 6 months. If somebody told me I was going to lose $8,000 by not buying a home now instead of 6 months from now, I would be thinking very hard about trying to do everything I could to get in position to buy a house immediately. Would you agree with that?
Right. As long as you're planning to buy a house anyway, and
Correct.
you are able to do so, the sooner that you can do it, the better, just because all these factors are in play to make the cost go up over time.
Correct. And if you don't think you're in position, get with a lender that will sit down with you and develop a plan for you to get you in position as quickly as possible. Okay, so let's continue on. This one is going to show the additional cash that is required for waiting. Again, that's not in the form of your monthly payment, but your annual increase there. And again, you're looking at down payments. So the longer we wait and the more property values go up, the higher your down payment, even if it's the same 5% or 10% or 20% that you're going to put down.
Yeah, and I've been so surprised at how affordable getting a loan actually is. Like a lot of times we think of the conventional wisdom of let's put down 20%, but a lot of people don't do that.
Correct. Matter of fact, I've got clients that have the ability to put down 20% and decide not to because with their credit and the amount of mortgage insurance they pay, it doesn't make as much sense to hold on to that money.
Yeah, and on that note, I did want to mention that when you set this up, you put it for someone with a credit score in the 600s.
That's correct.
If you have a higher credit score, the savings could be even greater because you're not going to be paying as much in term for mortgage insurance and things like that.
Right. So we're gonna post a link to this online so you can actually take a look and read through this a little bit more intensely at your own time and leisure. But we can also customize this to your specific situation. So if you need that, you can reach out to both Robin and I, and we will make sure that that happens for you. Okay. But basically, I think you've been given a really good indication of, what does it cost to wait? Does it make sense to wait?
Right.
If you can afford it. And again, not everybody's in position to, but if you're in a position to, does it make sense to buy now versus waiting?
Yeah, I say that it does. Look at your finances and let us know what you think.
Absolutely. We'll look forward to seeing you on our next segment.